Welcome, and here we're looking at the US 30 on the 4-hour chart, and we've got overlapping wave structures, meaning that from this particular move down through here, this corrective move here, we've got this move up through here, but we've got this move down through here, which is, if we took this as wave 1 coming up through here, then you can see that we've got this move down through here. So that's a point of weakness. Now, in interpreting that, then there's a couple of ways to do that. We've either got the top in, which would be the wave 5 here, and then we'll be looking for a larger correction to unfold through here. Or secondly, we've got this here is a B wave. So this here would be the A wave, this would be the B wave, and then this would be the C wave for here, and then the wave 4 would go to here. It's not such a silly idea, because when we look at the other markets, this one here is the Dow Jones comp, which is the top 60 companies, which gives us a wider view rather than the Dow being the top 30. Well, they're not even the top 30 anymore. So the situation here is, you can see that we've got 5-wave structure up through here, which is the 1, the 2, the 3rd wave here, and the 4th wave here, and then this move up through here is only in 3 waves so far, so we'd be looking for a 5-wave structure up like this. So this 4th wave here is the one that we're looking at through here. It's just on the Dow Jones. It's just the fact that it's overlapped this structure here, also on the cash market as well. But this doesn't have last night's data in it, actually, because it's just an end of day program, and it just hasn't been added to it, but it's down, but it's not overlapping the top of this particular structure here. So we've got the Dow Jones comp there as such there. Then we're looking at the Dow Jones in terms of the daily chart, and this is its picture here. So we've got up for 1 and back for 2, and then we've got up for the 3rd and back for the 4th, and we're looking up for the 5th here. But now we have overlapping wave structures within this move here, and it really looks like a B wave coming up here, so like a 3-wave structure here. So that's why I was thinking, is this, and we've got 3 down here, we've got 3 up there, and if that's the case, then we would get 5 down through here as the wave 4 completing there, and then the move up from that point. We won't know that for a little while just yet, but that's another possibility. So the Dow Jones Transport, which is another sort of mover and shaker within the game, and you can see here that we've got up for wave 1, back for 2. This is all the 3rd wave up here, the 4th wave, and then we've got the 5th wave up here. Now in the 5th wave, once again, we're looking for 5 waves up, and we can quite clearly see that we've got the 1 and 2 there, the 3 there, and the 4 there, and we'll be obviously it's come down further, but would we be looking for wave 5 to move up through there? So we've got the Dow Transports, and we've got the comp, which still look like they've got the 4th wave here in place. So we need to bear that in mind when we're looking at the S&P 500. It's close, but it doesn't quite have overlapping wave structures on the futures market or the cash market. So this would be the wave 1 up to here, and this little red line through here, and the same with the cash market as well. So the move that's coming down through here, we've got it in 3 waves so far, and it hasn't overlapped. It's close, but it hasn't. So look, if this market moves straight up through here and finds support on the 1700, then we've got our wave 4 here still intact, and we'll be looking for a higher move up through here. At the same time, we need to be mindful that this can develop into a 5-wave structure to the downside. And I just want to point this out here too, because if we do get 5 waves to the downside, that'd be 3 there. This is the 4th wave pulling back, and we get the 5th wave here. That would give us 5 waves to the downside, and it would also give us an overlapping wave structure through here. If we do get this 5 waves down through here, then after 5 waves comes a counter trend. So we would see a counter trend come back up to, well, here, or into the supply zone through here, and then we would see it moving lower from that point there. So the short trade would be there, and of course you could probably get it higher through here as well. So we need to see if this stays in place and we move up from this point here, or this 5-wave structure down here occurs. So this is when we look at the European markets, it appears that the European markets are the weakest, and they've sort of led the way down. Obviously the Dow Jones is the next weakest. The S&P 500, the Dow Transports and the Dow Comp are all kind of holding their own there, with a little bit of hope that there's a 5th wave to come up through here. So we just need to allow it to play out to that certain point there. The Australian market, well, we need to take it in consideration with not only the US but also the UK market as well, which is showing weakness, and also the base metals and precious metals are showing weakness now as well. So obviously BHP and CBA can be strong drivers within the market. So but first of all here I just want to point out that just come into the Australian market here, and I'll just start from the bigger picture here as well. Yes, we know that we're at the 5,000 through here. We also know too, what we've been trying to work out is that the 61.8 retracement level from here to here is around the 5,000 mark here. So it has moved up through there. So we're sort of taking it as a bias that we will be developing a 5-wave structure to the upside through here. And if I can just put that there, that comes into there, that comes into that point there, and we do have 5 waves in here. Some of it's a little bit dodgy, but we can work out that we've got the 1 and the 1 and the 2 in here, the 3 to here, the 4 into here. The 5th wave up through here is a little bit tricky to interpret, but if we do get a pullback, if the 5-1 doesn't become the support there, then we need to be looking at this coming back into the wave 4 of 1 lesser degree, which would be this low through here. And the wave 4s tend to be quite complicated, especially when wave 2 is simple here. So we would first of all just start looking for an ABC back there, but at the same time we got to look for triangles, and we got to look for other sort of choppy sort of scenarios as well within here. So so in that interpretation there, we've got up for wave 1, we've got back for wave 2. We can see that we've got wave 1, wave 2, wave 3, wave 4, and we've been looking for wave 5 up here. But like I said, this is a bit too, if it's clean and clear, then we can say, that's how it is, but it's not clean and clear, and it's just, it's just edging sort of higher. We understood that there would be some sort of reaction once we get to the 5,100, and that is the case, and it is reacting. Normally the first thing we look for is the levels, the next levels down that surround the main number that we're working with, so the 5,100. So we would be looking here for, naturally would be looking for, let me just get this in here, the 10, the 20 and the 30. Now if we got support on top of the 30 here, then we'd be moving up from that point. So 5,100 is the balance line. The group 2 below 80, 72 and 65 is the first level of support, and this is the resistance here. So normally the corrective pattern would end up being in the range here, and normally if we allow it to unfold to a point where we can understand it, we can see that it's probably in this is probably a corrective wave here, but to go long we would need it to get onto the 5-1 to sort of prove to us that is the case. If we just open this up a little bit here again further through here, we can see that we've either got wave 1 down to here, wave 2 coming back to here, or this is wave 1 here, wave 2 here, and this can be the 3rd wave down. So this can be the 4th wave here. So even if we do get a weaker opening through here, then we'd have to look at this being the A, the B and the C for the 4th wave, and we would look down for the 5th wave here, and that would give us 1, 2, 3, 4, 5 to here, and if this was a wave 1 here and this was a wave 2 here, this would all be wave 3 then, and then we'd still come back to the wave 4 of 1 lesser degree here, and then we would have another leg down through here. So either way around here it's going to get very sort of choppy, so it's not really in a trading environment. We've got the two main drivers, say CBA here. We can see that CBA has got it's got its old highs up through here. This is just a 20-minute chart when it fell out of bed here because of policy from the government. But look, the 73.50 here, if this market remains under the 73.50, well then obviously it can move lower from that point. So that's a real point to watch today if you're trading the SPY. Then if the CBA is above the 73.50, then you've got half a silly chance of actually moving high. But whilst under that, then it can retest the 72, which is the support here. And obviously that corrections are normally in 3 waves, so we'd be looking for an A and a B and a C possibly through here. But if this 72 became the resistance, then you know that it will be going down from that point. So you've got 2 points of weakness here to look out for. And let's have a look at BHP in Australia. In fact, just before we go there intraday, we should be able to pick it up from here. So just on the daily chart here, because it's also got a turning point from yesterday as well. And the turning point that I wanted to point out here is that when you normally see this, when you see this bar in a trend here, when it's open higher, tested higher and closed lower on higher volume, it's a sign of weakness. Okay, so also within this as well, we can see that it's probably getting quite close to, first of all, the 35 here is the main number through here, and we would be looking for a pullback into the 35 here being the first high above the level. So we've got the arrival, the reaction, the first high above the level, and then the correction from that point there, which can come back to this point here or this point here close into the 34 there. So that's that would help bring, if CBA and this market were down, then the ASX 200 would be down as well. So let's have a look at the commodity. I'm going to start with copper here because we've just been talking about BHP, and this is all part of it here. So look, from this move up through to here, we've had 5 waves moving up through there. So we're looking at an A and a B and a C. The little circle here, as I mentioned before, just outlines the top is normally the 50% and the bottom is normally the 61.8%. So I've just got that sort of sitting there. Of course, the midpoint here, the halfway between 20 and 10 is the 15. So it's the midpoint, the 5, second strongest number. So it's offering support here. So yeah, we'll see how that pans out. But we've got our first move down, which seems to be in 5 waves. So if I can just move into there a bit closer. So this from this high here, we've got the 1, 2, 3, 4 and 5 through to here. So I'm just calling that wave A at this stage, and wave B moving back up through this area here. So a wave B normally pulls back the 50-60% through here, but I think it's just important to look at the 318 in this particular case here, either the number here, but the actual supply is right in here, or it begins up through here. So the 18 is just a psychological number because it's an even number. It's the only first even number when you get close to the 20 here. So that's it, but let's just sort of see how that goes. So we're looking at this being a B wave back up through here, either shallow to here or up to here. So it's got 2 choices there, and then we'll see the A, the B and the C coming down. So it can pull back, as I mentioned, to the 310, which is closer to the 61.8% mark, but normally the A wave is normally the sharp one, and then wave C would be on more of an angle. So let's just see how that develops either from here or from up here. If it's going to develop from up here, that means that the market is like stronger, and then this would be lower from this point here. So we'd end up with a a flat correction just coming back into this section here again, so, and then moving up from that point there. So yeah, further a bit more weakness to come in there, and this is the same. Whoops, I'll just go to oil first as well. So with oil, it's got the same sort of pattern too in moving up as the copper market through here. There's a couple of things that we need to have a look at through here. Is that this move up through here appears to be in 5 waves, but it didn't make the new high through here. Not that a wave 5 has to, and I'm a bit reluctant to call this in as a wave 5 as such, but I'll just put it there for the time being. And the reason for that is that when we look at Brent, we can see that, you know, with Brent we were looking for you know, wave 4 through here, which was quite a huge sort of complicated process, but wave 5 has made a new high above wave 3 here. So it is possible for that to be in place there. It's also possible for this to just be wave 1 here and wave 2 to come back through to here. So that this does look corrective at this stage here, but if it does come down further past the 61.8% mark, then we know that it's weak at that stage there. So this will be the same for here as well. The circle is the top is the 50, the bottom is the 62%. So, and the 105 as well. So you can imagine that this does appear to be corrective at this stage. We can allow it to come down and spike through here somewhat, but we wouldn't want to see it as a retested resistance. You know, we can see it spike down, you know, then we'd want to see it like this moving back up through here. We wouldn't want to see it, you know, coming down through here and then finding that as resistance there and then taking that low out, because that would be a signal to short it at that stage there. So what we get here in the next thing is the deciding sort of factor. If, you know, if this is going to be up for 1 and back for 2 here as an ABC and then moving further up through there. So anyway, let's just see how that pans out. And gold is, well, it's still a little bit sort of tricky, because the price action down through here still appears to be corrective in nature. So, and that's the same with silver, or even more so in silver. So, you know, I know this is a corrective move back up through here, and in the main trend as well with gold as well. Let's look at it this way here, I guess. So, you know, we'd always been looking for a move back up through here, but it overlapped the 1350 here, which was this particular low here, which pretty much gave it a possible bullish scenario with up for 1, back for 2, 3, 4 and 5 here, but I can also count this as corrective as well. But we know that the main trend, you know, is down through here, and we've always been looking for one more low to come in. So it's possible for that to occur. It's just that this move down through here appears corrective, and we need to be mindful of that. So the first things we need to look at is the 1272 and also the 61.8 retracement level down here as well, because we could probably see this as an A wave to here, a B wave to here, pulling back to the 61.8%, and then a move up through to here. So that's what we're sort of looking at, but that's why that B wave is in there at the 1250. So the bottom of it's 61.8 and the top's the 50. So yeah, look, I'm not really sure which way to go with this, because this movement down here appears to be corrective in nature, and it appears that it can also work lower here as well. The main point here is that it's not sitting on 320 or 330 for long trades, so it's got a bias of weakness. It's under the 1300 here, so it's got a layer of weakness there. If it found the 1272 as resistance as well, then it's another layer of weakness. But at the end of the day, we still have to, because it's this line here is just the equal swing, so the distance above is the distance below. That occurs a lot, and that still leaves it at the 1250. So this 1250 here it becomes a really important part in the bigger picture as well. So if this became the retested resistance here, then we'd be looking much lower down as well from that point there. So let's just allow this to unfold, because it's very tricky. You can't really short it, at the, while you're above the 72 here as well. I mean, if you're short in here already and then we get it here, then that's fine to short it there. So look, it's just a bit of a rock and a hard place for me at the moment with this market. So the other point is that the stocks, all the markets are moving together, aren't they? And that's normally a fear factor. In this case, it's the Feds, maybe withdrawing their, bond buying 85 bill, so it's all the markets are like moving together, and it's just the fear factor, and it's not each market individually finding its own way. So, right, let's have a look at FX. Okay, just starting with the euro here and just keeping it really simple, we can see that the 133 is the balance line through here, and group 2 is support, and group 1 up here is resistance. So if in this particular case here, this looks corrective moving, this looks impulsive to the upside, this looks corrective to the downside, meaning that that high should be taken out. This move up here appears impulsive. This move here sideways appears corrective, so that high should be taken out. So a breaking high into the 133.10 would be the long trade for this as well. Depending on how close you get to the markets, well, there'll be a reaction there. Normally the distance sideways here will give you the distance to the upside, but it is the 133.30 up here, the top of group 1, as support that will get you to the 50. So just bear that in mind. The Australian dollar is doing pretty much what we expected it to do. So in a bit of a nutshell here, just the 4-hour chart here. So we've got wave 3 in, which we knew yesterday, and we're looking for wave 4 here. Now, because wave 2 is simple, that means wave 4 is going to be complex. And it is surrounding a large number here as well, the 90. So we can expect a move up in 3 waves minimum, okay? It could end up in a triangle, but let's just look for an A and a B and a C. Now, the A wave up here can be in 5 waves, or it can be in 3 waves. So we won't know that just yet, but if let's have a look anyway. Let's move in a little bit closer here. So on the 1-hour chart here, I was looking at this being on our chart on our website. We've got that as the A wave there, and this is the A, B, and C here for the B wave to come in through to here. Okay, so that's a possibility into this little area through here. But the way that I sort of see this developing from this point is that we do seem to have a 5-wave structure to here, okay? So that's up for 1 and back for 2 here, and then this is all part of the 3rd wave here, which is not complete, which would be the 1, the 2, the 3, the 4, and then the 5 to here, okay? So that's just the 3rd wave here, that's the 4th, and that's the 5th there. So if we have a look at that internally through here, we can see that on the 20-minute chart, from the low here, we've got, as I just mentioned, we've got 5 little waves up here for the wave 1 through to here. So we've got wave 1 to here, and then we've got wave 2 to here, okay? So the wave 3 is way up here. So we've got 1, 2, 3. Now in the 3rd wave here, we've got up for 1 here, back for 2 here, and then we've got the 3rd wave to here. But in the 3rd wave, you can see another little 5-wave structure in through here, which is all fine. That's the 3rd wave there. The 4th wave in 3 waves pulling back here. That's fine. And then we've got the 5th wave. Now in the 5th wave moving up here, we've got up for 1, back for 2, up for 3. This is the 4th wave here, and that will take it up to just above here for wave 3 here. After wave 3, then we'll be looking for an A and a B and a C for wave 4 here, and then we'll be looking for little 5 waves up through here. I'm not sure how far that will go, but normally the wave 1 here and the wave 5 here are the same length here. So that will give us 5 waves up to that point there. And if we get 5 waves, then you know what happens next, don't you? We get an A and a B and a C here for the B wave, a 3-wave swing, and then we'll get another 5 waves moving up through here as well. So I think that's pretty much the logical track, that if we get this completion through here, so that was what we'll be watching. So I guess the best trade would be coming at this point over here to catch this 5 wave section up. So try not to lose too much money in these swings across here. Alrighty, good morning, good luck, and enjoy the day ahead. And the other little point that I need to make too is that you know, the ASX 200 and the Dow and all those things, they're in a bullish trend. Yes, there is weakness in the market. So another way to look at change as well is that in the bullish weekly cycle for Australia, the Wednesday can be down in the morning and then up in the afternoon, and then Thursday is the bear day, and then Friday and Monday normally the follow through days if the volume is in there for the Friday. So if the Wednesday close today is not positive, if it's lower on the close today, then there's a change in trend as well. Okay, so and if there's going to be a change in trend, if that closing, Wednesday's closing is higher, if Wednesday's closing is higher, then Thursday will be the bear day. But if the Wednesday's closing is lower, then you've got to expect a rally on the Thursday and then the Friday and the Monday to be lower. Okay, so just sort of keep that in mind. We will have to put some short trades in for the robo method to balance the books up somewhat. Okay, that's it. Cheers.